What is your revenue? Full amount or only the commission? Gross or net? This question is common for online platforms or app stores, just as examples. And the answer is not based only on who issues the invoice or collects the cash. Yes, we are talking about principal versus agent issue, so let's illustrate what the problem is. So you can have a creator of some digital content like app, game, or music, and that could be the principal. He or she can transfer this content to the agent to sell it to the customers, like the creator wants to sell his app on some digital marketplace or app store. So app store would be the agent. And then an agent, app store, for example, transfers this content to the end customer, right? And that's just the illustration of one of many scenarios. And in this video, I'm going to show you how to determine what to do in a simple example. I am Sylvia of CPD Box, the website with loads of IFRS checklists, Excel files, explanations, and more. So check that out if you need practical knowledge of IFRS. IFRS is pretty clear and states that you should not include the amounts collected on behalf of others into your revenue. Why? Because they are not increasing your equity. Well, but what does that mean in practice? Under IFRS 15, the key question is, does the entity control the specified good or service before it is transferred to the end customer? If yes, then that entity is a principal and recognizes revenue gross. If not, it is an agent. It arranges for another party to provide the good or service, so it arranges the sale, and recognizes revenue net, usually only its commission. Well, it's not always that simple to determine what your entity is. So the IFRS 15 gives us a few indicators to help. Number 1, primary responsibility for fulfilling the promise to the customer. So it's you who guarantees quality of a good or service, and it's you who is responsible for guarantee repairs, any corrections, modifications, or post-delivery service, just examples. And yes, then you might be a principal, but it's still just the indicator, and the control is important. Number 2, inventory risk or similar exposure before transfer. For example, if the goods you are selling are stored in some warehouse and burglars go and grab them, then you bear the damage. This again indicates you are the principal. Number 3, discretion in setting the prices. So if you can influence or set the final price of the goods or services, either directly or indirectly, then this indicates you are a principal. Well, if these indicators are not there, it indicates you are an agent. Well, these are only indicators. Sometimes one of them is met and the other one is not met. And in a similar situation, you should really think carefully whether control of goods or services was transferred or not. So it brings us back to the beginning. It's not so easy, and in reality, it can happen that two almost identical transactions are treated in a different way. Let me give you a few examples to illustrate. A digital marketplace sells a downloadable template for 100 currency units. The template's creator receives 70 currency units, the marketplace keeps 30 currency units. Another question, does the marketplace recognize revenue of 100 or only 30? And the answer is, well, it depends. Because under IFRS 15, we need to assess whether the marketplace controls the template before it is transferred to the end customer. Now, scenario A. So we have a bit more info here. The creator controls the template. The creator is responsible for the content and updates. The creator can sell the same template elsewhere, and the marketplace only provides the platform, payment, and access. So these are the indicators that control of template is with creator before it is transferred to the end customer, And digital marketplace is likely an agent. So it accounts for the revenue as debit cash or bank accounts or whatever modality with 100 currency units, credit payable to creator with 70, and credit revenue commission of 30. So as you can see, here the marketplace cannot show the revenue of 100, just the revenue of 30. Let's change the situation a bit. Scenario B. Now assume the template is created exclusively for the marketplace. The marketplace sets the selling price. The marketplace is responsible to the end customer with regard to updates and some services. And the marketplace controls how it is sold. And these are the indicators that control of template is with marketplace before it is transferred to the end customer. So marketplace may be a principal. And therefore, the accounting would be debit cash with 100, credit revenue from digital products with 100, and then separately debit cost of creator fee 70 and credit payable to creator of 70. Now, why does it matter? Let's sum up both scenarios. In scenario A, the marketplace was an agent with profit of 30 and the revenue of 30, which was the commission only. In the scenario B, the marketplace was a principal with the profit of 30 because its revenue was the full 100, but the cost of the creator was 70. So the same profit, but the difference is revenues. And this is why it matters, because financial ratios may be affected. Bank covenants dependent on the revenues from sales might be affected. And also bonuses of management calculated based on the sales revenue might be affected too, and you can go on. If you want more examples with more details, I will link the article below this video. And if you want to learn more about IFRS 15, continue with my IFRS 15 playlist. Link also below. Subscribe, like, and thank you for watching. Bye.